Trades real quick before Donnie shows up, then we can get started. So for trades real quick. Nothing there, nothing there. Slight drawdown, nothing there, nothing there, nothing. Something there. So find something up here. Time frame. It's currently within a zone right now. Nothing there then. Go back over here. Let's finish doing this right here. All right, should be good. Let me keep looking for entries over here real quick. Nothing there. You're odd pulling back right now. Looks like everything's kind of pulling back right now. Just came down. There. There. It's technically something here. CHF pair, if I skip that. Anything else here? Hey, what's up, Billy? How's it going? Hey, Kendra. Thanks, Phil. Yeah, doing good. I'm just waiting for Donnie right now. We have this mentoring session with Donnie, so I'm waiting for him to show up. We're going to go over some of the pairs that he wants to cover. So if you guys want to sit in, feel free. I'm still looking for some trades right now for the next 4-hour candle close, but it doesn't really look like there's anything, really worth taking right now. I think after the whole Biden thing, everything kind of slightly reversed, but it's also just like market's just dead overall as well. So yeah, Biden just released his plan for 1.9 trillion. It's a lot of money. So they're going to be printing that. It's going to weaken the US dollar. So we're probably going to see UJ drop further, USD CAD drop further, and then probably see all of these swing back as well. Looks like it's just going to do like some temporary pullback because of the news, but obviously, it's supposed to go in the other direction. So we'll see how that plays out. Still waiting for Donnie over here to pull up real quick. Yeah, Kendra. Everything was in profit like not too long ago, like about maybe a couple hours ago. It was all like straight in profit. So I was just leaving it alone. And then Biden's news came out right here about 8:27. So about like maybe an hour ago or so. So like as soon as that came out, everything kind of reversed slightly. Sorry, my neighbors are in the pool right now. I don't know if you guys hear those little kids yelling in the background. Hey, Donnie, let me see if you're here. Hey, Donnie, could you hear me?
Yes, sir. What's going on?
Yeah, not too much. How are you doing?
Doing good. I'm just trying to find those. I have the screenshots of all of the 3 pairs I want us to talk about today. Give me not the 3 pairs, but the positions I took. Give me just a second. I'll send them to you here.
Yeah, definitely.
Okay, so I do have the first one.
Okay, cool. You want to pull it? You want me to pull it up for you?
Yeah.
Let's see.
It was What time is this? This is UJ. It is on January 11th at 3:30, so 15:30 military time.
January 11th at 3:30 a.m.
Eastern Standard. Yeah. No, 3:30 p.m. Eastern Standard Time.
Okay, so that's 15 hours my time, 1500 hours. Let's see. You said January 11th, right?
Yeah.
11th. Do you know what time frame were you trading it on?
I was looking at. I'm pretty sure it was the hourly. Was it hourly?
Hourly? Okay.
No, 30 minutes. 30 minutes.
30 minute? There we go. All right, cool. So the 11th at 1500 hours, which would be right over here. All right, cool. So I got it right here. Do you know what strategy were you applying or how you're analyzing it?
So what I was basically doing, let me pull up switch my templates really quick. Okay, so I saw it was a K2 SR.
Okay.
And I was using I was trying to like catch it right there, like spot on with the trend meter. Let me scroll back just a little bit. That's the 11, 15, 30. Yeah. So if you're looking at it on the 30-minute, do you see the K2 indicator that came up? The single indicator that came up at 14:30, basically an hour before that.
The invalid one right here.
Oh wait, hold on. Sorry, it just brought up like Aussie and give me just a second. I gotta scroll all the way back. Yeah, there we go. So it was let me see, 15:30. Why did I do the one that was way back here, I should say, the one at 11 o'clock a.m.
11 o'clock your time, right?
Yeah.
Was it this I think it was this invalid buy right here, right? Is that what you're looking at? Or
Yeah. I don't
okay.
know why I jumped into a sell on that one. I don't know. I know that was invalid because like I said, it's not matching with the meter like at all in any way, shape, or form. But I think it's because I looked at the MACD, because if you look at the MACD on what time is this? 11 a.m. Like right there at the crossing. I was like, okay, well, even though that's invalid right now, I'm guessing it's gonna make that reversal right there at that point. So I guess that was my way of thinking. I should have took notes on that position. But I remember when I saw that like strong drop, and I'm like, okay, and it's close to support, and I see a lot. It was getting into range at that point. I was like, you know what? I don't think it would like hurt too bad to just get in this guy and just wait for the drop right after the range is done. Make sense?
Gotcha. So you took a sell right here, right? Or did you take a buy?
Yeah, I took a sell at
Gotcha.
15:30. Yeah.
I mean, yeah, it looks like it. I mean, personally, I don't trade against the trend. The trend's super strong right here. It's like super green. So I personally wouldn't have taken it because for that specific reason. But normally I don't even look at the trend. So technically, I wouldn't really. I mean, let's see what. So you took a sell right here, right? I'm just trying to figure out like what your thought process was and then taking this trade so I can understand, what you were looking at. So you said you were looking at MACD. You entered a sell like right off this candle right here, or was it off that signal candle?
At the 15:30, like literally like right at the 15:30 candle.
Gotcha. So like right when the candle closed.
Yeah.
Okay, so right here, and then do you have like your stop loss TP? I'll just draw it on the thing on here.
Yep. All right. Switch back to it was. Sheesh. Hold on. I'm doing this from my phone. That's why I was like switching back and forth.
That's all good, bro. Yeah, no worries.
Okay, there we go. I had my stop loss I entered at 104, 117, and I had my stop loss pretty much in the middle of the range, like at 104.22.
Sorry.
No problem. And then I had my TP at 103.958.
103.958, you said?
Yep.
Okay. All right, so I got this down right here. Let me see what you did here. So you did get stopped out, right? I'm assuming?
Yeah, immediately.
Okay. Yeah, so a bunch of things here like that raised red flags for me where I wouldn't have taken this trade is so for one, it's in an uptrend, right? Because the trend meter shows an overall uptrend. On top of that, on the shorter time frame, it shows an uptrend as well, where if you draw parallels, like from this point from the low, or even like from here, if you drew parallels from here, it would have been an uptrend. So everything here points towards an uptrend. So that's why I personally wouldn't have taken this for a sell. So like one red flag is that the trend meter is green. So overall trend is up. On top of that, the short-term trend is up as well. And then on top of that, the momentum is going upwards as well. So everything is pointing towards up. Like I wouldn't even think to take a sell right here at all. And then let me see if there's anything else that I could probably pull out of here. You said you're using the K², right? So I'm assuming you probably identified this rejection off this point.
Mm-hmm.
So if you had identified that rejection, I would have taken this sell right here, because it would have given you a better, confirmation of it to possibly come down if you weren't like not even looking at the trend, because this, this identifies like a swing downwards from this point, because you have rejection from here, and then you have the sell signal right here that gives you the confirmation that momentum is going to come down right here. Yeah, I don't know, for this right here, I just there's nothing that would point towards me wanting to take a sell there, because even if you look at the structures, there was no clean rejection off any structure. So if you pull this up again right here, the high was right here, but the zone was actually right down below it. So unless there was like a swing high, like say if I take this off right here, say if there was a swing, obviously the high is right here. The high would be right here. Let me grab this other line. The high would be right here, and then the low would be right here, and then the swing high would be right here. So if I was to take a sell, I'd take it over here at some point, like once I get a sell signal over here. So let me see if I get a sell signal right there. So at this point, this is where I would take the sell, because there's an actual rejection point right over here, and then it's followed by an actual sell signal right here, identifying a sell. Yeah, because I mean, even for this right here, there's just nothing that really indicates like to tell me to take a sell right here. Because even if you were identifying it from the other perspective, like basic price action, it's still establishing higher highs, right? Because like from right here, it's establishing a low, a high, a higher low, and then this could have possibly, if it ended up pushing up this high up here, this would confirm, a bullish move. So, yeah, I don't know. There's nothing here that really indicates. Do you have like another like reasoning behind why you took it, or is it just because you thought it was going to come down from this point?
It was more of a gut instinct, and like I said, when I jumped into it, I was like, man, I feel like I'm rolling the dice because I'm violating all rules. And when I backed out, looked at the higher time frame after I entered the position, I want to say like maybe 30 minutes after one candle closed, I was like, crap. This is a super duper strong uptrend. Like even on the higher time frames, like the trend meter is a solid green. Bye, baby. It's a solid green, like, across the board. I was like, yeah, I'm super swimming against the river, on this one. And I was like, well, maybe I can get bailed out and break even, at best. And it's like, and, obviously price is like, yeah, no, that's not happening. We're going to punish you for, an unwise decision. But I pretty much, I guess I knew that one. Like, I mean, overall, this week was pretty decent. Aside from me getting destroyed by the Dow, I mean, that after like I gave it thought today and just kept looking over things, I see my mistakes with that, and that was just more so like, well, I think we talked about the week before. I don't know if it was last week or the week before, but just like combining strategies instead of separating it, and I guess honestly, I got the rules confused on two strategies because what's the word for the criteria to enter on one strategy, I applied it to another. Does that make sense?
Yeah, exactly. Yeah, because I noticed that you were using the K2SRs, and then you're using the trend meter as well, which is fine. It's completely fine if you do this, but it just depends on like where you would be, taking the trade. So for example, if you're using the SRs, your entry would have been right here because price broke structure right here, and then you had a sell signal at this point, right? So if you were to use the K2SR strategy, you could have entered right here for a sell. And you would have been perfectly fine because it looks like this probably would have played out right here. If you took a short position right there and you let it play out, it would have hit, I don't know if it would hit TP, but it looks like it would have hit TP eventually, right?
Yeah.
So if you were
that makes sense.
So if you were applying this strategy, this would have worked. Same situation if you were applying the intraday strategy, there just would have been no entry here because obviously there's no overall sell trend going on. And if you're applying the pivot strategy as well, I don't think there was it was still in an uptrend as well. So I wouldn't have taken the sell just yet at that point.
Yeah, I mean, I feel like I've done a pretty decent job. Not to sound vain, but I feel like I've done a pretty decent job as like self-evaluation of just some of the things that I did wrong to correct it.
Yeah, 100%. Like I'm glad that you're showing me a bad trade because people normally don't do that. They want to show you a good trade, and here you're self-evaluating. You understand where you went wrong, and you're going to move on from that. Like you're actually going to learn from this mistake, and then you're going to move forward from that. But I could see where you probably got excited. And you got that good feeling of it's probably going to come down because you saw this nice
exactly
at this point. Because I've been at that point too sometimes where I just see this and I don't have anything else on the chart. Like I just have that and I'm like, oh, this looks nice. So I take this, I see the sell signal, and then you see the false signal right here. So you think that this is probably just gonna swing right back down
because it was invalid. So I was like, oh, okay, here we go. Let's take this drop. And then at that moment on that time frame, and even on the small, it's kind of deceptive because on a smaller time frame, the MACD is always going to show something different. So when I saw that cross getting ready to happen, I'm like, perfect. Let me jump in for like the perfect sniper entry instead of just like crossing my T's, dotting my I's, and checking on the higher time frame. And just even before I even do anything, I should just never just jumped in there at all. Just realizing like how strong the trend is. It's making higher lows the entire time. And I knew as soon as that, that one high right there, I was like, I'm playing with fire if I jump into this one because there's nothing indicating a lower low or an indicating of a reversal at all. It's just literally, I guess, my hopes and dreams convincing my eyes, but it's not there,
Yeah. So like using the MACD down here, the reason why I don't use MACD is because it doesn't really give you an accurate trend. It'll give you like these little, like you see where it becomes like light red down here and it just indicates, the trend is like retracing a little bit. But as you can see right here, it shows that it's like super red, but it's not even going down at all. It's just going sideways.
Yeah, clear divergence.
Yeah. So that's why I personally don't like using the MACD, but you can't, like one way to use it is if it matches up. So like, for example, here, you have a buy signal, right? You have a buy signal, the trend meter is green and the MACD is green as well. If you were to take this trade right here, you would hit that full TP right there, right? So that's one way to do it.
Yeah, definitely.
Another one right here too, where you have this green buy signal, the trend meter is green and the MACD is also green. Same situation there. You would have had two full TPs back to back right there for about 30 pips.
Oh, like we said the other time, two positions within one. Yep, there you go.
Exactly. You have this one right here, and then you have that one right there as well, both hitting full TP. That's one way to do it, because the way that the MACD works is, if you're using the oscillator, obviously it indicates the trend, but it shows you the trend on the current time frame. Like the thing with the trend meter is that it shows you the overall trend because you can use 4 different time frames, so you have a better picture.
Oh, I didn't know that. I thought the trend meter was just like the MACD, just shows you on that time frame.
Oh, no. So you can change the data right here. So you can change it. Like the default settings are 30-minute, 1 hour, 2 hour, and 4 hour. So you basically see what the trend is moving at this specific time because you're on the 30-minute. And then you also see what the trend's doing, 4 hours later because you have the 4 hour time frame as well. So it gives you it gives you that head start. So you're getting it at that point, and then you're anticipating that price is going to continue in that direction for like the next 4 hours because you have the 4 hour time frame as well.
Okay. So when it says up to 4 hours, let me make sure I'm asking this question correctly. Is it taking the information on the other 4 time frames to display the trend being strong? Like in other words, it's saying, hey, based on the information I see on the 30-minute, 1 hour, 2 hour, and 4 hour charts, this will be an uptrend based on the information on those 4 time frames.
Exactly, they're all on 4 time frames, but you can see them on your on one chart. Because if you looked at the videos from before, we used to have 4 charts open at a time because we're doing a top.
Yeah, I remember.
Yeah. So instead of doing that, to make things a lot more efficient, it's better when you just have one screen and then you're able to identify the important things on those 4 screens all on like one little bar down here. So that's why I created this indicator, so that instead of having 4 screens up, we could just have one screen and then we could work directly off this one right here.
I did not know that. That is such a game changer. Okay, yeah, perfect. Yeah, I don't have to back out of time frames anymore.
Yeah, and that's why I stopped using MACD, because I used to use MACD a lot before too. I would use that on 4 different time frames as well. I would have exactly what we're doing now. But since I created the trend meter, which is kind of It's kind of a spin-off off the MACD, but it's more so off the Ichimoku cloud, because I find the Ichimoku cloud to have a better trend when you're identifying short-term and long-term. So it's pretty much the same thing. It's just for example, here I have them for 4 different time frames versus just one, just so you get that bigger picture, so that you can anticipate where price is going to go, a couple hours from now, maybe a day from now, depending on how you change the settings, because you can always change this from like 4 hour to maybe the daily if you're trying to take a longer trade. And you can see right here it turns blue because the daily trend is different. It's not on the same wavelength as like the 4 hour over here where it turns green.
I see. I feel like my mind just exploded just now. Like that is more efficient. No more backing out unnecessarily.
Exactly. And that's why it makes it a lot easier when you're like identifying the trend and you're taking momentum. Because basically, if you know the direction of the trend and then you're catching momentum swings, you're able to just, piggyback that momentum every time it swings up. You make a little profit, hop back out, swings back up, make another profit. And you just keep doing it until it ends pretty much.
Okay. And it's a slightly dumb question. And the reason why I guess you say the two reasons why we start on the lowest time frame, meaning the 30-minute time frame, because is it because it's the lowest efficient time frame that I guess I say, is it because it's the lowest efficient time frame?
For the trend meter?
Well, the K, in general.
So I mean, it just depends on how you want to trade. So if you're trading intraday, 30-minute would probably be one of the better time frames, 30-minute, 1 hour, because if you're trading intraday, you're trying to get in and out of the trade within maybe 8 hours or so. So if you're looking on the 30-minute, that'll give you a good setup where you can hold that trade for maybe 4 to 8 hours, and you'll be able to get out of that trade by the allotted time. Obviously, if you're scalping, you can use something quicker, like the 1 minute, 5 minute, 10-minute, because you technically want to get out of that trade within the first 1 or 2 hours. So it just depends on how long you plan on holding the trade. Like, for example, when I trade on the 4 hour, I'm expecting to hold this trade for maybe the whole day. So, every 4 hour candle is like a big difference. So I'll like enter that trade on the 4 hour, and then it probably might end like the next day within 24 hours. So it just depends on your trading style. If you plan on holding it very long, if you plan on holding it for a short period, then that's where the difference would lie. The only difference is that, the shorter time frame you go on, the more noise you'll get. So that's like one thing to look out for, but it's always going to vary.
Makes sense. I think it's because since I started looking at the 1 hour and 15-minute time frames more often, I reprogrammed my brain, because I used to when I first started trading, I started trading H1, I would say, for like the first 2 months, and then after that, my cousin showed me the Ichimoku, and I was like, oh, this is amazing. And like, I was profiting on a live account so much. I really blew my account at that point. I mean, I did because I didn't understand risk management at that point. But as far as profiting, like everything was just clicking, with the Ichi. And I remember his first warning is never go below 4 hour, stay out 4 hour all times. And I'm like, okay, this is great. But as the money kept going in, I guess greed must have clicked in. And I was like, yeah, this is taking forever. I'm not trying to hold this from Monday to Wednesday,
Yeah, exactly.
Meanwhile, all my other friends, they're getting in and out by the end of business day, or maybe, before London session starts. I'm like, I want that to be me. I'm still holding on to the same positions from, like Sunday and stuff like that, but I guess, it was just, I guess because it's just to see their progress of them closing at the end of the day and profiting, but they had a lot more losses than me. So I don't know what went through my head. Like they had a lot more losses than me, but I guess it's just like my brain being reprogrammed. Like, hey, they're closing more, so clearly they're doing more. But I guess that was the bad way of thinking. So I guess I got impatient in shying away from the 4 hour time frame, because I feel like it would just take forever. I'd rather just get in and out by the end of the day,
Yeah, exactly.
But since my lifestyle is a little different, I think I have to go back to that, staying on the 4 hour time frame. Because I noticed that some of like the positions you put up, like I'm like I don't see what Shawn sees. I'm like, what? I'm like, where the hell is he getting this from? And then when I back out of it, I'm like, oh, I'm like 4 hour, even the 3 hour. I'm like, oh, it's clear as day on this time frame. I'm like, okay, well, never mind. Now I see why. And I'm like, how the hell can he enter on a 4 hour, but still some of these trades close out same day,
Yeah,
So I was
exactly.
like, man, I've been thinking pretty naive on that one.
Yeah, I mean, it just really depends. Like if you're trading on the shorter time frame, more trades aren't necessarily better, because the more trades you take, the more risk you take on as well. Because if you're taking like 1-2 trades a day and they both win and you have no losses, those are like straight wins. But if you're taking like 10 trades and you have 5 wins, 5 losses, you basically at break even. If you just like if you were able to eliminate those losses from those X amount of trades, you'd be in a better position. But I mean, it really depends on the person too. Like if you're able to trade all day, then the 30-minute and 15-minute would be good, obviously, because you can scalp, make more profit that way. If you have a strategy that works well, on the shorter time frames. But for the most part, for me trading, I realize that the real key in trading, because I'm pretty consistent with my trades, it's more so eliminating losses. It becomes more of a risk management game than stacking up profits game. Because the real key is like just eliminating your losses, because the less losses you have, the more that you can compound, obviously, right? So it just makes it a lot easier, like for me to just take like 3 or 4 trades a day rather than taking like 20, 30 trades a day on like the shorter time frames.
I see. I
Yeah.
was just jotting down notes as you're
Yeah,
talking.
it's something that comes with time, really, because like before, like even like 5 years into trading, I was still addicted to like scalping intraday trading, because every time I hit a TP, you get excited. You're like, oh, you hit a TP, and you see the profits, and then you'll hit like 3 TPs, and then all of a sudden you hit one loss and you lose a bunch of money. You're like, damn, if I was just not greedy and I didn't just like want to hop into another trade, I could have kept those 3 wins and I could have been off my day, right? So it really depends on the person. I think the longer you trade, like time wise, the more you'll condition yourself to understand that it's better to take, like, more trades aren't always better. It's sometimes it's less trades that are more accurate that are better. It's like, quality over quantity for the most part.
I definitely can agree to that. I
Mhm.
definitely can. Plus, I remember when I was the first time I did FTM run, I used to have so many positions open. I'm like, am I allowed to open another one? I'm like, how much am I risking on this one again? Like, I would just lose track of everything. I'm like, crap. And plus, I wasn't writing things down the first time I did this, So
Exactly.
you're right. I mean, now that I still have this FTMO going on, like, I'm going at a much slower pace. So I'm pretty happy about that. And it's a little bit more manageable now. If I like see a position open, like I don't have to like fret or worry or anything like that. Because I remember, like, even some of the positions that I'm taking, like, when you put them in the chat and like I'll see 3 go up at once, I'm like, crap, I can't even take these 3. I have no space, no space left. Like, it's not even that I have no space. Let me phrase that.
The
It's
margin
that
gets too high, right?
exactly. I always think worst case scenario. I'm like, what if like everything was say stop loss, like right now I'll be busting my daily profit. So that's how I kind of like mathematically equate it. Like every position I take from you, I always count that's like 1%. So if I'm only allowed to risk 5, I'm like, okay, he put up 3 positions just now, so I can do 1%, 1%, 1%, and I'll close little by little every time it's like, take profit 1, 2, and then I'll move my stop loss, as price enters more into the profit zone. So yeah, that's just pretty much, I guess, the way I look at it. And I'm getting used to the moving my stop loss a little bit more. I will say this, I kind of got a little agitated in the beginning. And it's mainly because with the Dow, it's been so volatile that I'm like, I have to move it up a little, in my opinion, a little early this week, only because of what's going on. And there's been so many times I would just get stomped out in a blink of an eye. And I wrote down, I made up a rule, move stop loss to break even after 50 points, right?
Mm-hmm.
And every time I move it there, it always just drops right back down. And I'm like, holy crap. I'm like, am I doing something wrong, or is it what's going on right now, with the riot and the impeachment and things like that? And yeah, I just felt, I don't want to point like redirect blame or anything like that, but I feel like maybe it's because of what's going on, because a lot of the movement doesn't make any sense. And it looks extreme. Like these are some long wicks, I'm seeing on the Dow.
Exactly. Yeah, the Dow has been pretty crazy. Like even today, like I knew it was gonna bounce back up at some point, but I mean, I wasn't trying to risk it getting into this trade today, even though if we took the trade, so like I don't know if you follow the trade today that I called. I called using the new addition to the strategy that I've been discussing. But if we just took the original entry, like if we didn't take the invalid signal, we would have hit full TP actually, which was like right here, we took this invalid signal because we tried to take that buy stop that was above. Uh,
Mm-hmm.
but yeah, and I don't know what happened. Like I'm trying to think, what did I do that made me want to take that buy stop? Because I think I put the buy stop a little too close for this trade. Because the thing is, if we skip this invalid entry, we ended up taking the first valid signal like we normally do, it would have hit full TP right here if we would have taken that. So I kind of regret not taking that one because it would have went
Hey, you
straight
never
to
know.
like little to no drawdown right there. Um, but yeah, I'm trying to think what happened this morning because I remember I was looking at this and we called this trade, or I called like a buy stop or something, and then
It was a
I think
sell stop.
yeah. Well, yeah. What happened was I think I put the wrong the wrong parameters on there, or because at first I put a sell stop and then I switched it to a buy stop, and I think I was supposed to leave it as a sell stop. I was getting confused because people kept talking about it during the trade. Because like what happened here was, yeah, I posted the signal here and it said sell first, sell stop, and then people in the chat were like, no, it's a buy. And I think I wasn't paying attention, so I just changed it to a buy stop, and then we ended up taking the wrong trade. I didn't take it because I gave a warning there. I said that, market's moving weird. I'm not going to take it on my account. It's not going to be an official trade. But I think some people still took it, which, unfortunately, like some people took some losses on this one. But if we did do the sell stop here, it would have hit. So the market's just weird, bro. It's been like super weird this week. I'm sure you've seen it, like the Dow. I don't know what's been going on, honestly. Like I know that the impeachment, Biden stimulus and all that stuff, obviously that has an effect on the market, but I wasn't really expecting, these huge spikes, because you see all these huge wicks all over.
Yeah, like that's what I'm saying. It dropped me down to break even. It would just ding it and then go right back into profit.
Exactly. Like this one right here. I think on Tuesday, it literally just triggered the stop loss and then it went straight up. Like it literally went, like, it wicked the stop loss right here and then it went straight to full TP. See, it like wicked it right here?
Yep.
And like it slightly wicked and then went straight up. And I was like, I knew this was gonna happen. It happened so fast that I couldn't move my my stop loss or take it off like temporarily. So I mean, it happens
very well.
Yeah, I mean, it happens. It's stuff that we can't really predict, and we just, we roll with the blows, basically.
Just like roll with the punches.
Yeah, I know. I mean, I think next week will be better. I'll probably smoothen out. But I think this week I'm pretty much done for the most part, especially with the US 30, with tomorrow being Friday. So the market's probably gonna move crazy again tomorrow. I'm not sure if there's news. Let me see. Yeah, there's actually like some heavy news tomorrow for USD. So we'll see how that happens. And next week's actually gonna be a little crazy too, because it's a holiday on Monday. It's MLK Day. And then
yeah. Oh, that's what I was gonna ask you. Is that a bank holiday on Monday?
I believe so, yeah. I think the markets will probably still be open, but it's just gonna be like really, really slow because the US markets are gonna be closed. So like people are still gonna be trading, but obviously there's not gonna be much movement during the US session. There might be like US 30 might be open, but I don't know if it's gonna be actively traded, because sometimes it's weird, like, because since US 30 is it's a future, so it's technically open like 24/7, but the stock market's going to be closed, so I'm not sure if it's really going to move or not. It'll probably move slightly, but not really much, because we have that.
I gotta see if I have to go to work on Monday.
Probably not, and I think the banks are closed, or they should be.
Yeah, that's so terrible, bro. Like the days I'm off, I'm like, perfect, I could trade London session. I can't, because if I'm off, the whole world's off.
Exactly.
It's probably more annoying than that.
You could probably still trade during London session though, because I mean, MLK is like, it's a US holiday. It's not an international one, or I don't know. I guess it is celebrated everywhere, but I don't know if like everything's gonna be closed. Like London markets, I'm not sure if they're gonna be closed.
Sure.
But yeah, next week's gonna be kind of crazy because we also have the inauguration on the 20th. So Biden gets inaugurated.
Oh yeah.
So like the whole first half of next week is gonna be kind of crazy. I'm probably still gonna trade it anyways though, just because. But I mean, we'll see how it plays out, because there's a heavy news. Like I'm looking here right now. There's news every single day.
That's what day is that? That's the whole week though, right? Okay.
Yeah, we got Sunday, Monday,
Wednesday, Thursday. Oh yeah.
Yeah, it looks like it starts to get crazy on Wednesday. Like Monday through or Sunday through Tuesday is all right. There's only like one news event, but once you hit Wednesday, it's just all over the place.
So I took a little L today. I mean, this week, just based on volatility, but primarily today. Like I took, a couple L's. Like I took that one that I just showed you. And the Dow, like, oh my goodness gracious, I lost like a couple hundred on that one. So I know my FTMO expires on the 18th, but I already messaged them, and then they already assured me like, hey, as long as you stay in profit, because right now they're like, you're 3%, in profit. As long as the account stays in profit, we don't mind extending you. You don't have to pay anything. I was like, oh, okay, perfect. So worst case, and then the guy already said, obviously if they extend me, I got to start from scratch, which no big deal. But He's like, if you extend it, that's gonna be from Tuesday to like Valentine's Day of like February or something like that. So you get another 4 weeks to like, get it together. So I go back to work then. So I figured, worst case scenario, just keep the account in profit for now. And then what I'll do if I don't hit it between now and Tuesday, just work on trading on the 2-hour time frame, or the 4-hour time frame like you and I were discussing. And you're right, I didn't see that many opportunities this week on a 4-hour with the US. Like it was like I didn't see that many, looking at one pair is not the move, I should say. I was thinking about just trading like, GJ, UJ, GA, and I want to trade a Aussie pair, but I don't know which one to try.
So Odd Cat is some of my favorite pairs for the Aussie are like Odd Cat and Odd Cat, AJ, and well, it kind of depends, like what kind of strategy you're trying to trade. So depending on what type of strategy you're trading, it will depend, because some of them move faster than the others. So if you're trading 4-hour, the Odd CAD and Odd USD work good. If you're trading something that you want to move like really quick, like if you're trading on the 30-minute or something, then Odd JPY, Euro Odd, and GBP Odd are all really good because they all move pretty quickly. So it depends on which one you're trying to trade.
I could do a mixture of both. Like I don't mind, because like I said, first thing in the morning, I wake up between like 6 and I want to say like 9:30. I'm able to look at the charts with barely any interruption. And then on my lunch break at 11 a.m., this is Eastern Standard Time. And then on my lunch break between like 11 and 1, I'm able to look at it with zero distraction as well. And then after that, market kind of dies down, agent session starts. So between 6 and 9:30, I can do analysis, and 11 and 1, I can do analysis. So that looks like sounds like the 4-hour, because my 4-hour would be 12, 4, 8, and the 12 again.
Gotcha. Yeah. So I mean, you can look at both. Yeah, you can look at both just to just to see if you see any opportunities. But I think my favorite Aussie pairs are Odd CAD, Odd JPY, Odd USD, Euro Odd, and GBP Odd. So 1, 2, 3, 4. Yeah, about 5 pairs. I think those are probably the best ones.
What would be the best strategies for Odd CAD, Odd US, and Aussie Yen?
For those, the 4-hour strategy works really good on all of them. But OJPY probably moves the fastest out of all of those, since it's it's such a big differential between the Aussie and the yen. So for that, I would probably, you could use any strategy for that one really. But for the Odd CAD, Odd JPY, and Odd USD for like all together, I think the 4-hour strategy works good across the board. But if you're trying to trade something on the shorter time frame, you have to trade something that's more volatile, like Odd JPY. Odd USD is good too, but it just depends on like when you're trading it. If you're trading it during London into US session, it'd be good. But other than that, it's pretty slow. Like right now, it's super slow, I think.
Yeah, I would notice it's like a turtle, so I kind of shy away from it. And the strategies that work best on the Aussie pair, what do you think? What strategy best fits?
Well, yeah, across the board, I'd always recommend the K2SR strategy on the 4-hour.
Yeah.
Like I'd probably start off with that. If you don't see anything on that, then you can switch down to like the pivot strategy.
Okay. Can we take a look at the, let's say Aussie Odd CAD. Let's look at the Odd CAD on H4 to K2SR.
Yeah, I think this is probably my favorite one for the K2SR. I don't think we really have any losses when you trade this on the 4-hour.
Oh, and that brings me to my second question too. I wrote that down, I almost forgot. The K2SR2 indicator, I'm having difficulty seeing how to read it. I'm like, it looks, maybe it's because on my screen, I have mine hooked up to my TV. It's like a 50-inch, but it looks very scattered, and that's probably because I am looking on lower time frames as opposed to higher. Higher would be a little cleaner. But how do you draw up? Oh, okay, never mind. You're doing it. Okay, never mind. I guess the answer to that.
Oh no, sorry. I was just drawing them up real quick. So how do I draw them on there? So
yeah, how do you draw the zones on the SR2 indicator?
Yeah, so basically when you have the K2SR indicator, you just have it set up like that. And then I'll pull up the rectangle tool right here, and then I'll just draw them over the zone. So I have my own zones over like that.
Why are some green and why are some red?
It's red because it established as a resistance initially, and then it's green if it established as a support initially. But the colors don't really matter, because when price crosses above it, like resistance can turn into support, and support can turn into resistance. So the colors don't really matter at all. It's just that's how they were originally established. So when this zone was created, like say if this price was tested more than 2 or 3 times, it was established as a support at first. But that's why I just changed I add my own zones on there, because when I take that off, they just look like normal zones. Like they don't look like support or resistance. They look like, normal rejection points.
Makes sense. And can we look at it on the 4-hour time frame?
Yeah. Oh, sorry, I'm on 30-minute. So let me go back on the 4-hour over here. So yeah, looking at it from this point, showing the K2SRs, zoom out from this point, and then I'll draw my zones on here. Got this one right here. This one down here. And then I'm not sure if you noticed this, but if they're like really close, like these two right here, I just make them into one big zone. Because you're not gonna trade like, if there's like 2 pips in between, you're not gonna trade if the candle closes in between like that little area.
Yeah.
Because you have to cover spread, of course. So you cover the spread, and then you have to make some profit. So whenever they're like really close, like for example right here too, one way to do is I'll just pull up the measuring tool and I'll measure it like in between each zone. And it's only like five or 6 pips away. It's not really that much because the spread's like 2 pips already anyways. So you're kind of better off just creating that into one big zone. So you don't get into like a small trade and then you end up getting reversed on as soon as you enter. So we got this one right here. This one right here. This one right there. And I think that's about it from this point. And this last one all the way up here. So yeah, well, once you have the zones set up already, you'll turn on the K2 momentum indicator, and then you can see here how easy it is to like identify these entries. Like there's so many entries that are available here, like in both directions, not even just one direction.
I noticed the Aussie is a beautiful trend. Like it's a beautiful pair that trends very, very well as opposed to the others.
Yeah, the Aussie pairs are definitely my favorite. The only one that I don't like is Aussie CHF, because that thing will take forever. Like we had a trade with the odd CHF that I think last month or like 2 months ago, where we held it for like a whole month. And we we're like, yeah, it moved like 13 pips, like the whole month, basically up and down. And then it finally hit our full TP, and we're like, yeah, I'm never going to take odd CHF trade again. But I still have just in case for the most part.
My goodness, a month. See, I would have put my head through a wall.
Yeah, it was crazy, man. Like I've never held a trade like more than a week. More than a month was like just insane. Like you got to a point where it finally went in profit, and I personally closed it out because I was like, I'm not trying to hold this anymore. But I had my alerts, so I was still following it, even though like I closed out of my trade personally, and it finally closed in full TP, just like a month later though.
That's true. Exactly. So what we have right there, so like let's say for example that's this week. Let's zoom to like on the screen so that way the left side of the screen shows like Sunday, and then at least we're like close as possible to it. Well, that's 4 hours, so it's probably not gonna show the left side of the screen, but like we can zoom in as much as possible.
Yeah, let's see. So which area do you want to zoom in from?
So I just basically want the whole screen to just show like Sunday to the today. Right, Sunday was it the 11th? Was it the 12th or something, or 10th? Sunday was the 10th. So like the 10th to the 14th.
Yeah, so this would be the 10th until the 14th right there.
Okay. So the only entry we would have there was it would have been invalid technically, right? That'd be invalid.
It would be this one right here. Or it'd be this, yeah, because basically when price, like what you're looking for is you're waiting for price to break structure. And then you're going to identify where the signal is, so you know which direction momentum is going. And then you pretty much ride that to the next structure down here for a full TP.
Okay. And that was the one strategy you were talking about the other day, right?
Yeah, this is the only strategy I use for the signal. So for all the signals, this is the only strategy that's been used.
So we see the momentum that it reversed there, and we just wait till, and then the reason why we get in at that point right there, how come we didn't go in a little earlier? Like for example, say that fourth bullish candle from the left. Like why wouldn't we enter there as opposed to like at that moment?
Bullish candle, this right here?
I mean, sorry, bearish candle. Sorry, the fourth bearish candle on the left.
Like this one up here?
Nope. 2 candles to the left.
This one right here, or
No. Yeah. Right,
yeah.
that one.
So,
Like, why
oh
would
yeah,
you enter there?
yeah. No, technically the entry would have been over here. So technically the entry would have been this one right here. But since you were zoomed in like so close, it was kind of hard to see like the other
Oh,
ones
okay.
there. Because we're trading on the 4 hour. So you're not going to find trades every week for every pair, right? If you're trading on the 4 hour.
Mm-hmm.
That's why we have a huge watch list to look through. And that's why we're not trading the same pair every single day, because obviously you're not going to find breaks in structure every day. But yeah, for example, here, if you were to enter this trade right here, it still would have been active and running right now.
Oh yeah, duh. True.
So it'd be active and running in profit on that one. So
Makes sense.
yeah,
Makes
this
sense.
would have been an entry right there, and then again right here is basically the same entry. It's just a little lower than this one. So
Yeah, that makes sense.
depending on where you wanted to enter. So like for example here, if you saw this entry point and price was up here, you'd enter a late entry over here for a sell stop. So that when it
As
does
soon
come
as it
back
breaks.
down, yeah, as soon as it breaks and comes back down, it'll automatically fill, because technically you would have been entering right here anyways, but just way down here.
True. Okay. How many % profit is that right now?
Oh, what was that, Donnie? Sorry, I can hear you.
How many pips in profit would that be right now?
This being profit about, let's see, about like 20 to like 25 pips. If you were like counting it to down here, it'd be like 25 pips, but it retraced up a little bit. So it's currently about 20 pips in profit right now. The thing with OddCAD is that it doesn't move that fast. So the pip worth is going to be a little bit higher.
Oh, okay. I see what you mean.
Because if you're going by percentage and you're only shooting for like 30 pips or 20 pips, your lot size would obviously be higher versus you going for like 100 pips and your same risk percentage would just lower your lot size.
That makes sense.
So
okay,
so like comparing like OddCAD to OddJPY, even though you're going for less pips, you're still going for the same profit because your risk percentage is still going to be the same, like 3 to 5%.
Okay. And I'm going to be looking at Aussie, not OddCAD, but the AU also, as well as EA and GA. So I'm having my options open. So, and then one of them I'm probably going to have like on H1. So I guess that makes sense then.
Yeah, I mean, it depends on like what you're trading and like what time frame you're trading on. Because if you're trading on the 4 hour, I mean, you might as well look at every pair, right? Because you have time, because you're only going to be looking at the pairs like 4 times a day. So you might as well look at every single pair. Because if you're only looking at one pair, you're not always going to get an entry, right? It depends on how the market's moving for that specific pair. Like for example, for odd, there's probably, if I go back here, I can probably look at a couple entries where we have like a buy signal right here, it breaks structure. That would have hit close to full TP, I'm assuming, somewhere around there. Right here, never broke structure, so there's no entry. Right here, we have a buy signal. You have another full TP right there. And it just really depends, but like, this is just the foundation. Like on top of this, you still have to use other confluences. Like, basically you want to see the confluence between all of the other AUD pairs. Like if you're going to take a sell here, you want to make sure that all the AUD pairs are selling as well. So like, for example, here, I wouldn't have taken the sell here, if we were to get a sell, because all of the AUD pairs aren't selling. Like this is bullish, OddJPY is bullish, OddNZD is bullish, OddUSD is bullish. It makes no sense for you to take OddCAD because this is probably going to swing up from here and be bullish as well. It's just going through a short retracement. There's other confluences that you have to take into consideration. Like this is just the foundation to identify the entry. But on top of that, you have to look at the other confluences among the other AUD pairs. That's why I'm like saying that you shouldn't like focus on just OddCAD, OddJPY. It makes no sense because you have the whole watch list here. So you're supposed to use the whole watch list as a full confluence, right? Because you're not just going to look at OddCAD, look at OddJPY and be like, oh, like just because this is bullish, this doesn't mean that, OddCAD's going to be bullish as well. So I feel like that's something that a lot of people like, they mistakenly believe. They take, like, they're like, oh, they see OddJPY is bullish, and then they're like, oh, I should take it because something else is bullish here, like OddNZD. But these pairs don't even correlate, right? So I feel like,
oh, they don't? Oh, I thought they did.
No, because the AUD and NZD kind of move the same way, but OddJPY are completely separate. Like they're totally different pairs. Like there's a correlation.
I thought since they're all Asian, they moved together.
Oh, what was that? All the Aussie?
I thought since Yen and New Zealand are all Asian, basically they moved together.
No, totally opposite. Because OddNZD and OddUSD and NZD Odd AUD and NZD are totally different. Like they're very similar pairs, So they don't move similar to like, say like EG. Like if you're looking at EG here, these are both European pairs, right? They usually don't move if they were moving in the same direction. So for example, like what you just mentioned, you thought that AUD and NZD move the same, right? So if they were to move the same, then it wouldn't be bullish. It would just go sideways. Because if they move the same, like if AUD is going up and NZD is going up, there'd be no direction, right? You kind of get what I'm saying here?
Yeah. I understand. Yeah, I follow
because
now.
it's kind of similar like odd NZD and EG over here. That's why both of these pairs are generally like ranging pairs because they're both European pairs, right? The Euro and the GBP, they both move in the same direction. So you'll see most of the time, they're usually just going sideways until they break out like temporarily. They'll go sideways for a long time. And then all of a sudden they have a breakout, retracement, and then back into that range.
Okay, I got that. So what I'm gonna do is like I'm gonna create a whole separate watch list with AJ, AC, AU, EA, GA, those 5 pairs. And wait a minute, hold on. Let's do GU too. So I'll take those 6 pairs, and I'm gonna use 3 of them on like the 4-hour, and then the other 3 on H1. And I'm gonna make sure I notate why I took that position, and then we'll go over it next week. So that way I have the whys behind the whats and screenshots and everything. So that way we know in detail, all the mistakes that I made can be corrected.
Yeah, exactly. No, that'd be perfect. Because the thing is, sometimes you just have to make mistakes so that I can correct you, and then you can learn from them. Because it's trading is really trial and error. You're not really going to learn just from, like learning from me or like learning from my videos. It's more so you practicing, making mistakes, going over them with me, and then learning from them so you don't make them again, like moving forward.
Exactly. All right, then, sir. Appreciate the time.
No problem. Oh yeah, and if you want to look at the correlating pairs, you can look up. Just go to MyFX book and then search correlation, and they have all the market correlation here. So it has all the percentage.
Because I have the app. Well, never mind. I got one.
Oh, you got the app already? Okay, perfect.
Yeah.
Yes.
And you just look up correlation filter.
Oh yeah.
And how do you? Oh, and you read that? How do you read that? Oh, like okay, 91% means I guess their strength of how strong they correlate with each other.
Yeah, exactly. So like if you're trying to correlate like odd CAD, like how we were mentioning earlier, how odd CAD and odd NZD don't match up with odd JPY. You can see that odd JPY and odd NZD only have a 56% correlation. So they're like complete opposite. And then you can see here which ones actually correlate. Like odd JPY with odd CAD, those correlate. Odd JPY and like Euro JPY, they correlate. And then Euro USD, et cetera, et cetera. And they have all the pairs here. If you want to, so like, for example, if you're trading odd JPY, you want to look at all the pairs that correlate with it, right? So you just want to trade all the pairs that move the same direction. So if you're taking a buy for odd JPY, you can take a buy for odd CAD because odds are they're going to go in the same direction. Same situation with like odd JPY.
Game changer.
Yeah, it's a huge game changer because this is how you match up confluences. Because the thing is, you can take twin positions. You can take one for odd JPY, take one for EJ, take one for GJ, and then you have 3 back-to-back wins, right?
Yeah, that's what I was saying. That's sexy. I like that. Oh crap, they don't have it on the app. All right, I'll go to the website. And how do you find it on the website?
Just Google MyFX book. You just like do a Google search MyFX book correlation, and then it should be like the first thing you find there. Let me see if I can find it here.
Okay, cool. Now you mentioned confluences. Can you like define confluences one more time? Because I have a small understanding of it, but not like a great one.
Confluences is just when you're looking at different things like different confirmations that will, add a better confirmation to the specific thing you're looking at. So like, for example, here, like I just mentioned, if you're looking for a buy on odd JPY, right? If odd JPY is bullish, so this could be a confluence here. Odd JPY is bullish, and then you want to find a confluence, like you want to see another confirmation. You just look at something that correlates with it, like EJ. Or no, I don't think EJ correlates. Let me check the list real quick. Odd JPY. Yeah, it does correlate with it, but I don't know why it's going opposite. That's why. So like, here's a confluence that you would use when not to take this trade, because you're looking at this and you're like, wait, hold up, they're supposed to be moving the same, but they're moving the complete opposite. You're like, all right, maybe I should just not trade this right now because the JPY is probably not moving how it's supposed to move, right? Because normally AJ, CJ, you can see that they're all bullish, right? So this gives you a confluence that you're like, okay, AJ has a confluence that's going up. CJ is going up. EJ is obviously not going up. So there's something wrong with this pair. But GJ is going up. NJ is going up. And possibly UJ is going up as well. Or it's just going sideways right now. So that's how you'll add like confluences to determine, you know, if one thing is going one way and the other correlating pair is going one way, that would be one confluence. Like for example, here too, if you see odd JPY is at or you see that it rejects off or support, like say it's rejecting off the support right here, right? Just not realistically, like this is probably not a support, but I'm just going to use this for example. You see AJ right here, you see that there's a support right here, right, for AJ, and you look over to CJ and you're like, okay, the same exact support is getting tested as well. So that's a confluence as well. You're like, okay, there's support, there's support. What are the odds of this going up? Like what's the probability of it shooting up? That'd be another confluence. So like one confluence is that they're all trending up. Another confluence is that they're both rejecting off the support. Another confluence is that we got a buy signal for here. We also got a buy signal for CAD-JPY. It's basically just matching the same confirmations for similar pairs, basically. You know what I'm saying?
Oh, okay, that makes sense.
Yeah. So
okay,
like,
I'm definitely gonna stare at this chart and see if I can work some magic with them.
Exactly. The main confluence would just be if you're looking at correlating pairs and they're going the same direction. Because generally, if they're both going the same direction, odds are they're going to keep pushing that direction, right? Because the momentum's pushing up for basically, if you're looking at the JPYs, if all the JPYs are pushing up, you know, odds are it's going to keep going up. Same with like odd CAD. If all the AUD pairs are pushing up or pushing down, odds are it's going to keep pushing up or pushing down. So that's like one example of confluence. But there's confluence is just, it's a general word for things that are correlating basically. Like things that are doing the same thing, but a different pair. Like for example, if you're trading like the JPY, if you want to see if the JPY is weak because you want to buy odd JPY, right? You can check the Japanese index. You go to JXY, and then it shows.
I was gonna say, you can do it with the dollar index too, right?
Yeah. So you got JXY, and if you want to look at the dollar index, if you're trading a USD pair, you know, DXY, and then you type that in, you're like, okay, cool, it's strong right now. So that would probably indicate that odd USD is probably going to hit downwards, right?
So if the dollar index shows that the dollar is strong, and let's say I'm looking at a XXX USD pair, like let's just say Euro USD, that means that's going to be a sell, right?
Yeah. Well, not necessarily. Well, yeah, that's one confluence. Like if you're looking at the DXY, if the DXY is going up, that's going to indicate that the USD is going to be strong. So if that's the case here, odds are it's probably going to head down. But one thing that you should also look at is like the European index as well, the Euro index, to see if that's strong. So the thing here is that the Euro index is weak right now. It's heading down, right? So if this is heading down and the DXY is heading up, then odds are your USD is going to continue down further because you already confirmed that the euro is weak and you confirmed that the dollar is strong. Okay. So that's another confluence right there as well. The confluence is just you're looking at the indexes to see how strong the actual currency is, and then you go and pair that with the actual currency that you're trading.
Okay. I like that. I like that. All these, I like the confluences now. Now that I understand that. Okay. I was just jotting this down as you were talking. Okay.
Yeah, I mean, there's a lot of different things that you can tie in. Like the more and more we have these sessions, the more you'll catch on to like what I look for. It's the same thing every single time. Like, you know, first and foremost, I look for the entry. Once I look for the entry, then I look for confluences. If the confluences match up with the entry, then I'll take the entry. And, you know, there you go for the most part.
Yeah. I'll work on some more confluences next week too.
Yeah,
yes, I like that.
Yeah, that would definitely be like your last thing to look out for. So first, always identify the entry first, and then after that, you can look at the confluences, and then you can look at the sentiment on top of that if that's something that you want to look at as well.
That range just looks so ugly. Might just pause for trading until Monday after tomorrow.
Yeah, I'm probably gonna take it easy until tomorrow's Friday, so I'm probably gonna take it easy after today, anyways, because or after actually by tonight, because the market's just like it's just
Martin Luther King Day is Monday. I forgot.
Yeah, no, it's crazy, right? The week just flew by.
I might just close out some of my positions before the week closes out. Like, 'cause I'm trying to get to that habit of closing out over the weekend anyway, since they won't let me hold it when I get a real account anyway.
Yeah, I
What
usually try to
time?
find out.
What time do they want all positions closed? Once you get a real account.
Well, it's just by market close, so it's going to be 2 p.m. Pacific Standard Time. So for you, I think that's 5 p.m. That's when the market's
Yeah.
closed. But I usually
Okay.
try to get out before like noon or before 11. I don't like taking the risk. Because the thing is, if you take the risk and you forget about it, they're not going to have any mercy on you, bro. They're going to take that account.
What?
Yeah, so I wouldn't even risk it. That's why I don't even trade on Fridays usually.
What do they do? Like, what happens if you miss that time period and you already have your a real account at that point?
Yeah, well, at that point, they're just going to tell you that you violated one of the rules because that's one of the main rules that they have you sign off on when you sign your contract. You have to agree to that you don't hold trades over, and if you do, you automatically forfeit your account.
You got to start over.
Yeah, but well, basically, to take your account away, you have to basically go for another one. Because
Why can't? What happened to a warning?
well, because the thing is, so put this for example, you have a 100K account, right? You let that go into the weekend. If that account goes directly into negative and you lose their 100K, like how would you feel if that was your 100K, right?
Oh yeah, I guess.
Yeah.
Yeah, no
So
warning.
you got to put yourself in their shoes. They're mostly focused on like risk management because the thing is, if you hold their trade into the weekend and say like, say some war goes on, like we don't know what's going to happen over the weekend, like say some like terrorist attack happens or something like that, and then the US goes to war and the US dollar just goes crazy in one direction or the other, and you come back and your
Mm.
account, you just lose the whole account or something. Or like say the stock market crashes over the weekend, I don't know, something could happen that will cause the stock market to crash. I don't know if you ever saw, did you see that crash that happened for the CHF like years back?
Oh no, not for the CHF.
Yeah, look, I'll show you right now. It was a flash crash that happened like super quick. So if I look at the CHF over here, see
Mm-hmm.
this huge spike right here?
What happened?
Yeah, exactly. This is why they have those requirements in place because this could happen right here where it drops like 20,000 pips.
Oh my goodness!
Yeah, and this was in 2015, so it wasn't that long ago, right? This happened pretty recent.
What happened to cause that?
There was something. Let me see if I can find this over here. CHF flash crash 2015. So if you just Google it, I think they have the link put up over here. Yeah, there was a flash crash right here. It was just the Swiss franc suffers a mini flash crash, and they explain what happened. And it happened during Asian trading hours, bro. Like the worst, like the time where the market doesn't even move. So what
Yes.
happened during Asian trading hours on Monday. It just came out of nowhere, literally just flash crash. Everyone lost all their money within seconds.
I wouldn't blame them. I mean, I feel like businesses would have gone bankrupt at that point.
Yeah, well, they recovered right after. It was more so like people that were trading that lost money, right? Because they had,
Yeah.
but like businesses, obviously, it's a flash crash, so it came down and then it came right back up because people bought the dip, obviously. But if you were
Yeah.
trading and you had your account open, like say over the weekend, because this happened on Monday,
Mm.
you could have like lost the entire account within like a few seconds.
That's true. I guess you're right. Damn, like a whole
Yeah.
100K would have been gone.
Right. Yeah. And that's just like, a lot of people don't understand the reasoning behind that, but that's why they're strict about it because they don't want something like this to happen. Because if this happens, you can bankrupt the company, right? Say everyone has the same USD CHF position and everyone does the same thing that you are doing, expecting that they're just going to get a slap on the wrist for, forgetting to close their trade. And then they end up losing the whole 100K and they're like, yeah, okay, all right, well, I guess we got to go bankrupt at this point.
That's true. No, okay. Now
Yeah.
I see it from the business side. You're right. I get it. Gotta do what you gotta do to protect yourself.
Yeah, exactly. I mean, I'd be in the same position. So, if you ended up opening some sort of funding company, it just, pretty much would just, you just lose your you lose your company at that point if you were doing that.
A lot of people have to pay out now at that point. Goodness gracious.
Exactly. It'd be crazy, man. I'd hate to be in that position.
Exactly. All right. Well, let's start looking at some more charts now before I go to bed and plot out my day. Well, I mean, it's Friday, and like I said, Mark's gonna be shut down on Monday, but at least I can do some back testing and practice before I knock out.
Yeah, definitely, bro. Yeah. More practice, the better.
Exactly. All right, yes, sir. I will see you later. At the same time next week.
Yeah, so we're doing Thursday, right? I'll get you on the calendar right now.
Yep.
Thursday the 21st at 6 p.m.
Mm-hmm.
All right, got you on the calendar, so you should be good.
Thanks, sir. All right, later.
All right, brother. See you later.
All right.